Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Friday. We got some news today. We got PPI, don't we? Yeah, we got core PPI, a couple of Canadian jobs numbers, but mostly PPI. Nothing much after that. So we might get some good move with PPI. They're expecting a reading of spot 5% month over month. So that is that producer inflation coming in. If it's higher than that, then, oh man, I don't know. I'm expecting that they'll have a pretty good move, though. E-mini coming in here yesterday. Pretty good spike at the end of the day. Kind of confusing. At first, I thought maybe it's just options ramp. But apparently, there was a comment from a Fed speaker basically saying that they were going to buy more 20-year treasuries because they just started issuing it and all this stuff. So, just talk of the Fed doing something, moving the yields and everything. So you can see over here in the treasuries, quite a bit of movement, moving higher overall yesterday. Giving all of that back today, though, because Italy is doing a rate lock, I believe. And so given the situation, if we get another large meta order selling because the PPI is high, then who knows what's going to happen. But the risk is to the upside because of the positioning, right? If it's less than expected, we might get some buying and that might be a better trade. So we'll see what happens. Oil's still just in the range and starting to get very, very tight. Yesterday was very tight. Gold and silver, well, gold moved really well yesterday, but today, pretty crazy. And we'll show you what's been going on with the dollar here in a second. Capper kind of in the range. So really, it comes back to the dollar. So yesterday, the dollar just got dumped on. And overnight here, because of, the rate lock and, a couple of other things, can't recall at the moment, the dollar is higher today. So we're going to watch this PPI. And watch this PPI and see if it affects the dollar at all. Mohammed says that Manuel says I'm late. Well, yeah, I am a little late today. I don't know what my deal is. I thought I was on track and everything, and then when I got downstairs and I looked at the clock, I was like, what the fuck? How am I so late? So, whatever. Another thing we should keep in mind, it is Friday. It has been a very contracted week. So unless the PPI comes out and is wildly off expectations by spot 2% or something month over month, right? We might get a little flurry of activity here for the news. And then, I don't know, we might do something else, We might just chill because it's been a long week. Those news are going to release at what time? At 6:30 news. So here in 90 seconds. So recommendation for you, go find a calendar. So I have the Financial Juice calendar. I have a calendar in Jigsaw, and sometimes I'll pull up the Forex Factory calendar too. Know when the major news releases for the week are going to be, because that's very, very important. Markets react to news, folks. Oh, we got to come back over here. We'll set that all up. Move that. No, don't really. Well, I think we're okay. As long as the window isn't minimized, we're okay. Also, other news: the Prince Philip died, so that's dominating the headlines today. Anytime that there's big news like that, a lot of economic news kind of takes a back burner, and it leads to less activity for us. So, I kind of see a setup where, there's a chance that we get something here, but otherwise, it might be a boring day. We'll see. We'll see. Okay, so a little bit of pulling ahead of the news, but nothing too dramatic. Remember, the number is spot 5 here. So they're reading out the Canadian numbers first. A little bit of selling there. Still waiting. I haven't given us the US PPI data yet. I haven't given it to us yet. They're a little late. I have several calendar websites, but I don't know how to use them or are really shitty. Well, you look at what the number is. So the thing that I like about the Forex, I'll show you here in a second. I'll show you here in a second what you should do. Zero Hedge says, can we make Biden's infrastructure plan $1 trillion bigger so the BLS can update its website? Because we still haven't gotten it. Because the BLS hasn't been very responsive. There's just too many people hitting refresh, apparently. It's been 2 minutes, so this is unusually long to wait. Oh, apparently everybody is boycotting Twitter tomorrow, huh? They're not going to tweet on a Saturday. Oh no, what will Twitter do? Yeah, US PPI data seems to be delayed, says Forex Live. I'm surprised that they're really even getting any activity there at 19.5 and the 10-year going back and forth while we're waiting for this. Oh, you know what? Where is my market analyzer? Cool. Oh, it looks like Bitcoin is going to try and make a run at 60K over the weekend again. They're up there. Nate Silver says, "Be smart, predict something that is already happening will begin happening in a few weeks." An analysis released by Circo Ventures yesterday concluded that supply-demand shift for the vaccine will happen earlier than expected, as early as the end of April and before the nation reaches the 70 to 90% threshold for achieving herd immunity. On your NinjaTrader chart, what do those red and blue boxes mean? That is multiple time series overlaid on top of each other on the same chart. I have a video about this called watching multiple time frames. It has a picture of the, watch all the time frames guy on it. And there's a link in there that will lead you to the Discord where you can download the bar type. So basically you go in and you set up the other bar type, or you set up another series. This is a 5-minute bar. And then, you change the bar type so that you get this candlestick that has the line around it instead of a wick. But it's just what the 5-minute open, close, high, low was. Okay, well, they ticked down 18.5. I still haven't gotten a number. Well, folks, I guess we're just not going to get the PPI stuff today. At this point, that number better be in line, because if the number is like really changes expectations, there's going to be so much conspiracy theory going around. You know what I mean? Because it's been over 5 minutes now. The drawing tools in NinjaTrader become even worse. So you're probably talking about how it changes from in NinjaTrader, the candlesticks where you have your cursor. The middle of the bar is like the time, and range bars change that so that you see here 550. Then you go to the other side, it's 555. So where my cursor is the time. So some indicators are drawing that were not meant to deal with that end up looking a little weird. So sometimes you can offset them, but U.S. adds Chinese supercomputing companies to trade blacklist. Good morning, Keller. Yes, because the inclusion, well, it doesn't add extra bars. It's just it changes where the bar draws in relation to the time. Here, see if you come over here to this chart and I put my cursor right on the bar right now, 6:39. So the time that it tells you, the center of the bar is when the time that it tells you when your cursor is over the center of the bar is what the end of the bar is. A bar that closes at 6:39, right? Whereas when you go over here, you have to go to the very end of the bar, and then it tells me, okay, the end of this bar is 6:40. I think that this way makes way more sense. I think that the default should be this. Zero Hedge says, just make the number up. Half the CPI is already estimated anyways. I mean, the thing is I don't know. I don't really put any indicators on anyways. I just got this moving average. The BLS website is busy. Refresh the page and try again. Like somebody's hacking it. It's a really bad number. I don't know, man. Something. I'm hyper suspicious now. See, like the treasuries are like, okay, I guess we're not going to get the number. Let's keep selling it again. I'm kind of tempted to sell it there. I bet you I could sell it at 18 and buy it back at 17.5. BLS should have just put the release on the blockchain, says News Squawk. You don't need to wipe those tears, Seth. I'm here for you. Is that no? It's just a Kleenex. I believe that it's one of my medications that I take. It just makes my eyes water more. So my eyes tend to water a lot, and some days I gotta dab my eyes with Kleenex. Otherwise, the tears will just roll down my face. PolitiFact drops mostly false rating on Biden's guns claims. In today's gun policy address, President Biden exaggerated about background checks at gun shows. That's correct, he did, because a background check for a licensed seller, you still have to do it. And the background check for a private seller, private sellers never had to do that, and they don't have to do it at a gun show either. So doing it at a gun show means absolutely nothing. It's just they focus on that because a large portion of private sales happen at gun shows. We don't have Kleenex here in Brazil, and baby wipes are so expensive people don't use it. Like I see you guys use it. Well, so something that happens in the United States, especially in the Midwest where they have septic tanks, is you use the baby wipes because you're old and, you know, you've got problems and whatever, and you want to be cleaner. And then you put it in the toilet, and those are not septic tank safe. So then you clog up your pipes with the baby wipes. Yeah, can happen. But you don't get Kleenex. You don't as far as I'm concerned, Kleenex is just like another form of toilet paper. Johnson & Johnson aware that thromboembiotic events, including those with thrombocytopenia, have been reported with all COVID-19 vaccines. What does that mean? What is thromboembiotic? Formation in a blood vessel of a clot that breaks loose and is carried by the bloodstream to plug another vessel. The clot may plug a vessel. What? Really? Oh, this is that thing that they were talking about earlier where they were like, oh, people can get a blood clot from it, but they think they know who it is that's vulnerable to it and what causes it and so forth. Do you guys really think we are gross for having a trash can for toilet paper right next to the toilet? Wait. Instead of putting, you wipe your butt with it, it's got poop on it, and then you put it in the trash? Please tell me that's not what you're doing. Why would you do, why would you do? They're selling it here, man. Look at this in the treasury. The guys over in Italy that wanted to do the rate lock are like, well, we're not waiting. Oh my gosh, Kyle, you gotta be kidding me, man. They just smell. Why don't you just put it down the toilet? Dude. That's so weird. I'm shocked. Kyle says that there's a video on YouTube from BuzzFeed where they talk about it and people go, I'm shocked. Listen, if you're putting fecal matter in a trash can next to the toilet, I think you should stop. I think you should put it in the toilet and flush it down the toilet. That is way more sanitary. Good morning, internet, says Keller. Well, I was right about I would be able to buy it back at 17.5. No, the E-mini's selling here. The conspiracy theories are going through my head now. It's like somebody, maybe a hacker did something, or the BLS just knows that it's bad. There's a number. The number is wide off of expectations, and they are dinking around with it so that they can trade it before everybody else can. It's going at because seriously, it's been almost 20 minutes now, and we haven't gotten the PPI data. At least you use toilets. Try traveling in China sometimes, and that's what my father said, because he lived in Hong Kong. He went on a LDS mission to Hong Kong. That they just have a hole in the ground, and you just squat over the hole. Most of the world uses trash cans for toilet paper. Okay, but why? This is what I don't understand. Why would you do that when you can just flush it down the toilet? Right? Even if that was a social convention in your area, why wouldn't you think, oh, that is really stupid to have poop, you know, sitting around in my house so that you can use it multiple times, and because the pipes can't handle it? The pipes can, well, if the pipes can't handle it, then I guess that's makes sense. I'm going to now talk about this all day. I mean, it shouldn't. I don't see why it would clog the pipes, because toilet paper basically dissolves in water after 30 minutes. The reuse. Oh my god. Okay, well, there's a big order at 16 in the 10-year, but you tend to see that at 16. Is fecal matter a good indicator for the ES? Probably not. I would focus on current data, and you know, old data that has been digested is not going to be very indicative of what, you know, is happening now. What happens first? Inflation spikes prove transitory, or the BLS manages to finally release the March PPI? Well, I'm feeling pretty FOMO here, because the E-mini moved down, the 10-year moved down, and the number has still not come out. And I'm just going to sit here and protest and, you know, send complaints to the CFTC, because I think shenanigans are going on here. Okay, they clear 16. I don't know, folks. FOMO short. Well, I think that what is happening here is, you know, those robots, I don't think the robots know that the data was not released. So I think that they came back in, and the trend was already down, and the demand has been to sell, because Italy is doing some rate locks. So yeah. But then you think about it, and, you know, like, if that PPI number comes out and it's really, really high, that's when it's going to be like, all right, there's shenanigans. Stocks and bonds sink as BLS website crash sparks inflation anxiety. And that's another thing that I wonder is, like, okay, does somebody actually know what the number is and is trading off of it? I would hope not. That would be illegal. Or are we all just sitting here thinking the same thing that I am? That, oh my gosh, they're not putting the number out. It must be really bad. I better sell it now while I still can, you know? It's not that you missed a whole lot of a move. We're still near all-time highs. Well, we're down. We lost about 10 points there in the ES since then. Well, they did clear the iceberg at 16, but they just ticked up at 16.5. So it looks like there's enough volume going both ways at the moment in the 10-year. Johnson & Johnson aware that thromboembiotic events, including those with thrombobiotopenia, have been reported with all COVID-19 vaccines. Why does AstraZeneca get all the flack? Trading Floor Audio retweeting that one now. So what put you at risk of getting a blood clot? Who needs to be concerned about that? So yesterday, I shouldn't talk about this. No, I'm going to talk about it. There's been reports on Twitter of women having unusual periods after getting the vaccine. And there's like a large number of users coming in and saying like the same thing. Now, I don't believe it is proof. I would say that is still anecdotal and not something that you could do stuff off of. But I'm a little concerned that we're to the point where everybody's supposed to be getting vaccines and everything, and now we're starting to have all of this stuff about, okay, BLS labor statistics. Sorry for the delay in PPI release, folks. Here are the details. The producer price index for final demand increased 1% in March, seasonally adjusted. Final demand prices rose 0.5% in February and 1.3% in January. Okay. PPI 1.0 versus expected spot 5, and X Food and Energy spot 7 versus an expected spot 2. That's the core PPI. So both of them were higher than expected. Significantly higher than expected, I would say. Year over year, your actual 4 spot 2 forecast 3 spot 8. Yeah. Shenanigans. I've already heard the story, just internet rumor. I think so too. But it concerns me when they're like, we know everything about the vaccine. We know it's totally safe. Oh, but actually, people get blood clots. Sorry. Okay. Okay, well. People that got the vaccine are now getting the virus. Well, you could. I don't know about that one. They were like, the chances of you catching it afterwards was very, very, very low. And if you did catch it, the case that you got was much less severe. I don't remember where I got that data from, but very clearly remember talking about that. Yeah, the PPI was delayed by almost 30 minutes, and the BLS basically released it on Twitter. I didn't know they had a Twitter, so I'm going to be following them. Oh, it's so close. I think the virus going around the vaccine, a very rapid evolution. Men are all right. It shows the numbers here now. Yeah, we did get the number. The thing that I continues to strike me, is that the right word, about the pandemic is how very little we know and how we are being pushed. People are pushing to make extremely confident decisions when we really don't know. when we really don't have the data to say, especially on the political side, all of this stuff about, this policy and this policy saves lives and all this. And then we go through it all and turns out that we really can't prove that any of these things had any statistical significance whatsoever, because when we go and we look at the stats, it just looks completely random. And it is going to take years. It is going to take years and all sorts of special math and stuff for these guys to sort out what the factors are that impacted the spread of the coronavirus and which things actually helped or hurt, No, hold on. This monitor is like pushed forward a little bit. All right. I am now really wondering, they were here, right? So they sold a good number of ticks down. And you've got to wonder, did some of them know some other method of getting the number that was faster than what we got? I mean, think about this number that we just got here, guys, for the PPI. The overall number we were expecting, spot 5. Normally we would get like spot 2 month over month, right? Spot 5 high. It was double that. 1%. Have we ever seen a 1% number on that? The E-mini definitely sad. Well, at the moment, we're still just within yesterday's levels, but we're kind of starting to get close to a spot where things could careen out of control. If there are too many people, don't say things like that. This is an old, worn-out false talking point from eco-terrorists that there's too many people in the world and then we need to get rid of them. But we've learned that the world population is going to even out on its own, and that with efficiency, we are more than capable of supporting them all. And the only thing really holding any of that back is the infrastructure in places where they're not able to deliver like food fast enough, for instance. Zero Hedge tweets over 40% of the March increase in prices for final demand services can be traced to margins for machinery and vehicle wholesaling, which jumped 6.7%. Nearly half the increase in service PPI is attributed to trade services, which moved up 1%. Oh wow, they tried to squeeze us out and then they just whoosh. Didn't take many to take me out at 16 at all. Why are you selling the low? Because I felt like it. Oh, you know what? I never turned on this other light. That would maybe help a little bit. Oh, you know what? I have this one too bright. There we go. That was good. It went okay, I guess. It wasn't just that I felt like it. It was I thought that 16.5 was too high. And I thought that I would get filled at 16, so I did it. So 2 for 3 on that. I'm happy about it. And that first one wasn't even necessarily bad either. Well, I'm wondering now. Oh, so one thing is that my little market analyzer thing isn't very okay. So looking overall, all of the indexes are down now, with the small caps and tech the most. Tech down almost spot 95%. RTY spot 68. Also gold hammered. Wait. Let me get this right. Producer price inflation was double what was expected, with it being a whole percent. We are expecting spot 5. We got a whole percent. The market is selling off because of concerns of inflation. And gold is down 1.39%. Okay. Okay, if you say so. It's hilarious, right? But it's because they only care about the treasury. It's because they only care about the treasury interest rate. They're trading the treasury interest rate correlation. It's so funny. BLS labor statistics: over 80% of the broad-based March advance can be traced to a 22.3% jump in the index. For unprocessed energy materials, prices for unprocessed non-food materials, less energy for unprocessed foodstuffs and feedstuffs, rose 3.2% and 1.4%, respectively. That's the BLS labor statistics on Twitter. For the 12 months ended in March, the index for unprocessed goods for immediate demand advanced 41.6%, the largest increase since jumping 49.0% for the last 12 months, ending in July. And yeah, somebody else on Twitter saying, breaking gold sharply lower on surge in inflation readings. But inflation fears drives the dollar higher. Yeah, it does appear that the dollar is higher, yeah. Gold just has too low volume, and I think that the momentum probably does. So remember yesterday we were saying, well, that's a pretty good up move. Maybe another day, maybe that would just be enough to get it going. And then right at the exact right time, they get hammered again. So it really does kind of feel like that it's a momentum, because honestly, if gold was on the upswing, I think that you're right, that like retail traders would be coming in here and buying the crap out of this thing, because I think everybody's concerned about this inflation thing. Okay, so they're kind of stepping off the gas there a little bit. I am noting that the dollar is coming down a bit. I'm thinking that we should change this dollar chart over to a minutes. So we can see that, yes, the dollar did go up. They're currently kind of pointed down a little bit. I need to reset all this. You know that in a stagflation crisis, everything goes down. Well, not everything goes down, but it's... When I looked back at the data for like stagflation, you get really complicated market dynamics in there, because assets do still increase because of the inflation, but then you don't get the demand and they go down. So like you'll get periods, you'll get moves of both. Like for trading purposes, you'd get moves both ways, right? But then ultimately the stocks were down, right? I'm not convinced that what we're going to get is going to be stagflation. I mean, at the moment, this inflation is not being driven, is not coming with a lack of demand with it, right? There's way too much demand at the moment. Many things, more demand than there was before the pandemic. Don't you think ES is pretty much sideways? Well, that last for scalping purposes, that was a 10-point move. I would say that the market clearly reacted off of that. So you think it's artificial demand? Well, I don't think it's demand that probably wouldn't be there if not for the government checks, yes. I was at a gas station in Florida where you had to put in the trash can because their septic system could handle paper. As for the movie, you said you never came across a 1% PPI number before. Shouldn't the market's reaction be worse? No, I wouldn't necessarily say that. Because first of all, I didn't necessarily see like an offside positioning before it, so that's a one key factor, right? The treasuries were already selling because of Italy doing rate locks. The E-mini, I would say it was down for most of the overnight session. And what we got was mostly a retrace of the move that happened at the end of the day yesterday because of the 20-year treasury, and was a move that I think given the situation was likely to retrace anyways. So there's all that. There was people expecting inflation to be high. And it's a really big B, yes, but given the situation, we should expect that our estimates wouldn't be as accurate anyways. So let's say that the impact from a numbers miss is not linear, which is to say, if we miss it by spot 1%, then we should move X much. And if we miss it by spot 2%, we should move 2X much. That I don't think that that's true. It's not linear. So I would say that the treasury itself come down 1, 2, 3, 4, 5, 6 ticks off of a PPI is maybe around average for a PPI release. And they're not done. They could continue moving for the rest of the session, right? So they wanted to correct. They just needed a reason, right? Well, yeah, because they bought up because of that comment from the Fed president about them adjusting their purchases. But when I look at the statement, I'm not convinced that it's a fundamental change for anything. They took up at 17.5. And I'm detecting a hint of some steepening here in the 5-year. Yes. That could change very quickly, though. Yes, we already covered the gold thing, Vlad. Actually, gold recovering slightly here. Trading floor audio tweets the VIX drops below 17 for the first time since February 2020. Got some okay movement there down at the bottom now that they're icing at 17.5. I'm kind of thinking that I'm not as sure about this spot. Well, the open in the E-mini should be interesting, I think. You think that they'll come out and still be bullish after all that? I'm a little hungry. I'm going to eat this Pop-Tart I've got. This in From the Hill, CDC director declares racism is a serious public health threat. Okay, well, the E-mini, there was some iceberging at 17.5, and now up through 18, 18.5, 19. The reasonable amounts being traded there, 3,000 to push them up. Hardly anything on the sell side. I don't see anything to explain why it came up in that way. E-mini is turning around and is looking bullish at the moment. Andrew Gibson, why are you trying to be a public health threat? I don't understand. Do you want people to die? Come on now. Alligator says, looks like the downtrend's over. That was like 3 minutes ago. So it's hard at the moment, and now that they had that move down and we came back, it's hard to judge how much the market really cares about the PPI thing. Because it sure feels, don't you think? Sure feels like they don't really actually care, do they? A 5.9% increase in energy. Is that correct? JB is at war with working. Oh, that's Joe Biden. Yeah. I gotta tell you, this is not something that you would expect to hear coming from me. But when I look at people trying to argue about Joe Biden, like for the gun law thing, like Joe Biden said a lot of things in his little presser the other day about gun laws that were very incorrect. But the proposals that he put out, for now at least, are not like the end of the world. You know what I mean? And I see a lot of people trying to turn it into like everything he does is the most awful thing in the world. Kind of like they try to do with Donald Trump. And I'm just sitting here like, okay, like it's bad policy maybe, but it's not a huge deal, guys. My 50% Fibbo level, it works 89, prove it. 89, that 50% Fibonacci level working 89% of the time, I call bullshit. 89%, no. St. Vincent volcano in Eastern Caribbean experiences explosive eruption. Forex Live says gold rejects the top of the range in an ugly turn. Well, I don't know. They're recovering it out a little bit right now. What if gold ended up higher on this session in the end? I mean, I can hope, right? Bank of America inflow to stocks the past 5 months, 576 billion, exceeds inflow in the prior 12 years, 452 billion. Wow, what? Investors have pumped more money into equities over the past 5 months than in the last 12 years. Meanwhile, the Treasury's sitting here at 19.5. That is a scary amount of money coming into the market for sure, Jack. Over leverage for sure. I don't know. I see. Here's the thing. Over the past 10 years, one of the persistent storylines has been that millennials just aren't investing. And then all of a sudden, because of the pandemic, it like all of a sudden turns out that they're really interested in the markets. Overly so. So I think that it was kind of more that millennials were just underinvested. And I have a theory. I've shared this before, right? My theory is that millennials weren't interested in it because their interests come primarily from what is marketed to them on social media. And because the social media algorithms were not picking up on financial topics before, they didn't really care. But then when they got old enough, it kind of started to pick up in 2019. So that in 2020, it just kind of came in at exactly the right time to convince all of the millennials that they need to be saving more of their money away and to put it into stocks. I just throw that out to see you speak badly about us technical freaks. Oh, I see. Anybody willing to nibble at 20? So if you look at 20 there, like they're making it's really vulnerable. Okay, they got 1,000. They got 1,000 to hit it. But you can kind of see it's not like the sellers aren't, or the buyers aren't quite sure about 20 for some reason. Probably because there's some iceberging happening at 23 quarters in the 5-year. Here's the E-mini opening up. Well, that was a terrible entry. Okay. Volume's still looking pretty tight. I think I'm having a little bit of a hard time adjusting to this tighter volatility. Okay. Still kind of not doing much there at 20 in the 10-year. Okay. Oh, this is turning out. So that was maybe a little bit too fast. They might cause themselves a little bit of churn here because of that, but that was a really aggressive buying. Overall, I do see some like cumulative delta selling. Just let by a little bit. Hmm. Okay. Yeah, they're getting stuck there at 91. You didn't catch the NQ move? Well, they're all still kind of down. Definitely they've recovered a lot, and the tape is looking pretty good at the moment. 10-year is just happy to be at 19.5, I guess. It's a weekly support, are you? Yeah, okay. If you say so. As time goes on, I care about past prices less and less, you know? Okay, well, we're getting something here. The 10-year is going to be is a difficult nut to figure out here right now, don't you think? So they're back to 17.5. Are they going to return to the lows in the Treasury? I mean, they came back off of 19.5 there very quickly, right? And the limit orders aren't standing in the way at all. I do see the dollar coming back up. Yep, it's the dollar. It's the dollar driving that one. What? Okay, I'm gonna take that. I'm gonna take that. That was I guess it wasn't that dramatic of a rise, but that was a little weird, don't you think? Just out of nowhere, okay, we want to buy it again now. Well, I should go like way higher now. So like the dollar was getting stronger, right? And then it ticked down just a tiny bit. I don't know where that came from. It looks like maybe the euro. But the immediately went right back up. That's what I'm seeing. Pump it, click. Yeah, it's sometimes it feels like that, huh? How much? I just took $20 on that. That's not that good considering that it was 2 contracts. But and you know there was an earlier loss, small little loss earlier. But the market is much constrained and I'm going for half now. So normally that would have been 40-50 and I would be done. Now I get 20 and I'm like, oh, okay. I guess it can be done off of $20 too, but. And I'm interested here in the 10-year now. I mean, it's moving around. I think I would much rather see more volume coming through both ways in it, but it's moving. Uh-oh. New article from Zero Hedge on the heels of yesterday's warning that the VIX term structure was signaling potential trouble ahead. Bloomberg reports one trader placed a huge bet yesterday that today's calm will give way to a storm soon. As we detailed yesterday, while spot VIX languishes complacently at pre-pandemic lows, Bloomberg notes the middle part of the VIX curve that shows expectations for late summer and early fall tells a different story. The spread between the VIX index and the implied 30-day volatility 4 months from now stands near the highest level since 2012. It is not unrealistic to think that there are some who are hedging the idea that some modest selling could spiral into something more meaningful in late summer/early fall, said Steve Sosnick, chief strategist at Interactive Brokers, who cited uncertainty about the infrastructure bill as one of the reasons behind volatility traders' anxiety. Until this summer, the infrastructure bill and any associated tax increases are mostly theoretical. That debate is likely to heat up and become something potentially tangible this summer. As Bloomberg notes, at least one whale is betting on that disturbance in force to come as VIX closed below 17 for the first time since February 2020. Katie Stockton, founder of Fairhead Strategies, told Bloomberg Television that the new floor is potentially below 11 based on where it has bottomed in the past. Well, I'm looking for them to get at least to 16. Yeah. But one trader yesterday made a major wager that the VIX index will rise towards 40 and it won't be lower than 25 in July. The trader likely made the purchase through several tranches, first buying 10,000 contracts in 2 block trades and then coming back for 100,000 more. They paid $340 for calls at 25 and received $130 for selling 40 calls. The trade sent VIX option volumes exploding higher yesterday. Finally, we note that the so-called skew in S&P 500 options is showing the smallest premium for downside protection relative to upside since December. So if you're not going to bet on an upside volatility move as opposed to a return to pre-pandemic nirvana, now seems like a good time as any from a valuation perspective, yeah. See, the issue that I see with this trade is I don't think that they're necessarily predicting that something is going to happen, but that the price of the VIX is so low that it is worth betting on now. And they could come in and run that trade a number of times and lose on it. But, you know, they could do it like 5 times and lose and then make so much more on the time that they win that it'll be worth it, you know? I see the delta going down and the price staying the same. Yeah, well, so pretty much every day for the past 2 weeks, cumulative delta has been negative and we continue to see stocks move up. So that means it does look like there's more selling than there has been, but it hasn't been slowing price down. Probably because bigger guys are selling to protect themselves while retail traders continue to buy. Because 4,100 was the yearly price target for a lot of analysts, right? So if you're going to bet on a upside volatility move as opposed to a return to pre-pandemic nirvana, now seems like a good as time as anyway from a valuation perspective. With VIX being priced in the low 17 area, I would imagine we would see more of these larger size bets going forward, said Chris Siddall, co-chief investment officer at Ambrose Group. I think smart money understands that although volatility has contracted a lot in these last 2 months, we are still seeing signs of excess market fragility appear from many different angles. In the short term, Spot Gamma warns of some potential volatility ahead of any downward move. While the estimated range did not change much for today, our EH view shows an inflection point under 40.90, under which we could see a moderate uptick in volatility. As you can see in the chart below, it's above 41.15 and below less than 40.90 that volatility may uptick due to the change in distribution noted above. This is an article on Zero Hedge titled Calm Storm, or what was it? Calm before a storm, new VIX whale bets on market fragility breakout this summer. I can remember numerous times when I saw a story like this from Zero Hedge and it took off. But EU news flow is bad news after bad news at odds with the US. I gotcha. Zero Hedge, not the greatest source? Well, no, I think that you gotta learn how to read news sources, right? So why do people let's talk about Zero Hedge. What is the thing with Zero Hedge? Let's go to their website. Or maybe it's down at the bottom of the page. Oh, come on. There used to be, oh, here we go. Manifesto. The Zero Hedge Manifesto, our mission to widen the scope of financial, economic, and political information available to the professional investing public, to skeptically examine and, when necessary, attack the flaccid institution that financial journalism has become. No, where is it? Basically, they're there because they think that if people understood finance better, that they would hate the Federal Reserve more. That's basically their thing, right? Okay, so if I come to the Zero Hedge webpage, why do people not like Zero Hedge? Okay, so here's a story. Calm before a storm, new VIX whale bets on market fragility breakout this summer. This is the shit you want to read, guys. This is good stuff, okay? This is telling you something about flows. Anytime that it's a story about a potential trade flow, you want to read that, okay? Next, if it's a piece of news about a factual event happening in the world. St. Vincent's volcano in Eastern Caribbean experiences explosive eruption. Okay, sure. That is maybe worth reading, okay? Big Brother mandates Brits at pubs register on government tracking app and hand over phones. Okay, well, so that is about a factual thing, but here you go. There is editorial bias right there in that headline. Big Brother, editorial bias, right? After unprecedented delay, BLS admits huge jump in producer prices. This is what you want to read. Except for that we already know that stuff because we lived it, right? U.S. adds Chinese supercomputing companies to trade blacklist. This is good. This is good information to know. The macro risks to the stock market are mounting. So would knowing what potential macro risks are out there so that if you see them, you can adjust quickly be worth knowing? Yes. Yes. Futures booked by hottest Chinese factory inflation since 20. Factual news. Okay, poorest Americans hit hardest by post-ban. I'm not getting the stories that I want to point out to you. This one was interesting. There are absolutely no job seekers. How trillions in stimulus sparked a historic job market crisis. That was a good story. Okay, here you go. Biden just declared war on millions of law-abiding gun owners. Right? So what is this? This is a right-wing editorial article, right? Monetary policy in America is a mess. Things are even worse in Europe. This is editorial content, and it's very right-wing leaning, isn't it? The Donbass War of 2021. You got to be careful about anything that has to do with Russia because they have been known to take propaganda from Russia. But I think that they do it because they want to show you both sides of the thing. Okay? So, back to the point. Yeah, is there a lot of shit on Zero Hedge that is not worth your time? Unless you're a right-winger and those kinds of articles entertain you, Reading a story about Biden just declared war on millions of law-abiding gun owners probably isn't going to help you in your trading too much, right? But learning about a new VIX well that is betting on market fragility and what strikes they are pricing in and all of that sort of stuff, is that useful information? Yes, that is so useful, guys. And guess what? You hardly get it anywhere else. So they are using Bloomberg as their source, but I have never seen a place where, well, you got to subscribe to Bloomberg for starters, but I've never seen a place where you get as much information about what major trade flows are coming through and what major analysts are saying, quite like Zero Hedge. It just doesn't exist anywhere else for a retail trader that I can find. If you find a source that has stories like that, you send them to me. Tweet them to me or message me on Discord or whatever, right? But Zero Hedge is like the only place that you get those things, right? And has there ever been an instance where Zero Hedge posted something about a trade flow and it was incorrect information? No, it doesn't. So to come in and say, well, it's from a bad source, irrelevant, guys. Source doesn't matter. Content matters, right? Content matters. And for us in the trading world, I believe that Zero Hedge is useful enough of a source that you're hurting yourself if you don't read it. Now, what are some things? Now, it's the same thing. Like if I see a story on the New York Times or the Washington Post, content matters, right? But what sort of stuff where are their issues, right? Well, first of all, they're both left leaning, right? But then the other thing is that the New York Times and the Washington Post have both published stories off of sources that proved to be unreliable and had to be retracted later, and they've done that a lot. So if you're reading a story over there, one of the first things that you got to be asking is who is their source, and factor that in, right? I tried Bloomberg and it fried my brain, so I stayed with a good old chart. I'm telling you. So let's talk about that again. Because here's my thinking. I think there's a hierarchy. There's the data, trading data hierarchy. Where's my little thing? I'm gonna write out a little thing. I'm gonna use I think I can use yellow. Yeah, okay. The trading data hierarchy. Boom. If you're a position trader, it's helpful, but if you're a scalper, no, I disagree. So, what are some of our pieces of information that we can use? Okay, we can use current asset prices. That is the price that the thing is right now, right? Current data, current fundamental changes. Or let's call this economic data, right? Economic data. What else we got? Breaking news. What are other things that you can other pieces of data that you can potentially factor into your trading? Okay. Order flow. All right. correlations. Historical prices. The news is out after the best moves happen already? Well, okay, we'll talk about that in a second. Is there anything that I missed? Is there a piece of information that, like a data source that you use in your trading that I don't have on there? Ah, there you go. Seasonality. Seasonality, says Kevin, which would include expirations. Seasonality and expiration. Yeah. That's a big one. Oops. Should have gotten that one before that. Well, if you have another one that you think I should put in there, then just stay it. Steve's recommendation. Okay, there you go. Analyst opinion. Analyst opinion. Okay. This one is like a whole subject in and of itself, isn't it? Okay, so how do you think these should be ranked? In terms of their ability to predict short-term price movements, what do you think? How do you think these rank? Okay, so I would say current asset prices on their own don't really predict future prices. Unfortunately, it is a element that you have to factor in and that you will use, but is it very predictive? No, it is not. So here's what I would say is I think that things like breaking news and economic data are some of the most predictive things that we have based on a short-term move, what it will do. I would also say that correlations and order flow are pretty good. These are things where you can make short-term predictions. Whether or not you can actually take advantage of them is another question, right? Okay. I would also put this seasonality and expiration. In fact, let's put seasonality and expiration above that. Let's put this as 3. And then I'm going to rank these equally. I'm going to say these are 4. Okay. And then I think that these are going to be like 5s. And this one I'm just going to put as I'm going to put it as 0. Just to keep in mind that like you have to use this, but it's not predictive on its own, right? You have to combine this with one of these things further on down to be able to make any kind of trading, right? Do you listen to news while trading? Yes. Also, historical prices probably top 3. Okay, so what do you get here, Kevin?
Kevin Wimmer says analyst opinions are the best. I trusted Jeffrey Gundlach and shorted the S&P at around 2860. It will be profitable soon, I believe. # no stop gang.
No stop gang. Okay, so the question here is then, if you think that they should be ranked differently, then let's justify it. So you were saying, or let's see here. Henry Stefanak says historical prices should probably be top 3. Why? And here is why I put it down at the very bottom, because every study that I have read about historical prices shows that they are ineffective at predicting future movement. It's just compared to breaking news, historical prices mean jack shit. Doesn't matter. You come up and there's some sort of setup that you have this weird, bizarre combination of moving averages that you've tested over the past 10 years. And maybe it doesn't happen every day, but when it happens, you have 100% chance of getting the move that it predicts. Okay. And then the Federal Reserve president is going to come out and say, hey, you know what? We've changed our mind. We're not going to buy bonds anymore. We're going to remove all support for the market because we're concerned about inflation. Okay. I don't care how good your signal is, what the historical accuracy of it has been, how adamantly it says that you should buy. That market is going to sell. 100% guaranteed it will sell all that day and probably the rest of the week, and you could just sell and forget about it. It would be literally the easiest trade in the world, and the only thing that would matter is how quickly you click. And even if you were slow at clicking, you would still make money, right? So, I argue breaking news is a more effective predictor of short-term movement than historical prices is. Right. So I don't think that you could put it above breaking news. Now, could you, or economic data, frankly? I mean, like, for instance, if it was a jobs number and the jobs number came out and it was like we had actually lost jobs that month, that would also be a sell, right? So breaking news and economic data, maybe those are kind of equal and whatever. Okay, so we can go down next to order flow and correlations. Okay. So, and I would argue again that correlations matter more than historical prices do. So if you come in and you see a certain historical correlation or a certain historical price setup, right? But then you come in and you see that the market is trading with a high degree of correlation to the dollar that day, and the dollar is just getting absolutely creamed, and the S&P 500 is going up, then you might have something like its RSI says that if it's above 90 that you should sell. I think that the correlation is going to win out. You know what I mean? To be honest, analyst's opinion depends on what kind of news. If you remember the Financial Times article regarding Wirecard, that slammed to the start. Yeah, I think that would be kind of more into breaking news, right? When I say analyst opinion, I mean an analyst comes out and uses other data sources that are up here that are already known and uses them to form and publish an opinion. Okay, so here's why I say that analyst opinion doesn't rank very high on the list, because you should be able to do all of that analysis yourself. And the only reason you use the analyst opinion is to check yourself to see, is there a piece of information that I missed? But hopefully, if you're doing things right, you should know as much as the analyst does, and your own analysis based on this data should matter more than what the analyst says. Right? There's also seasonality and expiration. So there's a little bit of historicalness to seasonality and expiration, right? But this is like baked into it. This has to do with like the way that market actually works. Like there's an expiration, and so people have to trade in certain ways because of the expiration. So I would say seasonality and expiration is really important too. So back to the question, do you have a piece of data, a study, something of that nature that suggests that historical prices matters more than correlations and seasonality? And then there's order flow. Now that one's kind of an interesting thing because order flow can be used historically. Right? You can look at you could come up with the historical price setups with order flow and trade off of those, right? So that's a little iffy. But I would place order flow above historical price patterns because I've gone and I've done back testing, and the strategies that I've back tested that are based on order flow are they're not amazing, but they at least stand a chance of making you money, whereas almost every technical indicator that I've ever looked at was dismal. So that's why I rank it out the way that I do, right? But here's the other thing is like, it's not like price doesn't matter, and it's not like the historical tendencies of something doesn't matter. It's just it's a hierarchy, right? And I'm just trying to say, here's the thing, is that when you look at all of the things, the pieces of data that you can use in your trading and how predictive they are of the actual movement, but then you compare that to how retail traders tend to trade, and retail traders tend to trade like this. They just cross all of this out and they just say, just look at price, just look at historical, price action. That's what they call it, right? Which is based on past prices, frankly, is as much as they say that it's not. It is based on, because you're making in order to make any decision, you have to make a comparison. You have to say there's a piece of data and now it's this, or this piece of data compared to this says this, right? There has to be a number, there has to be an inequality sign, some math somewhere in there to trigger the if statement, right? So if all you have is a price series, the only way that you can make a decision like that is if you're comparing it to past price. Now, you might be comparing the current bar to the past bar, the last bar, and that's better than comparing to a bar that was like 15 minutes ago, right? But there you go. So it's not like it doesn't matter. I'm just saying, look at everything that you can and kind of rank them in order of how much they actually matter to the market, and in terms of giving you the move that you're looking for. Because I think that retail traders are missing out when all they look at is this.
Kevin Wimmer says, I always look at a picture of the moon and click buy.
Okay, by the way, where did I got out at 91? They are now at 95. So I guess I was right to some extent. I got out at a good time because it did come back a little bit, but eventually they moved sideways and eventually moved up. So not necessarily the kind of trade that I'm looking to make by hanging on. So I'm okay with having taken that trade. And the treasury, by the way, all the way back up, as I've been ranting, I didn't even notice. As the dollar, it looks like the dollar continues to struggle. So. Now, analyst opinion, somebody asked on TikTok, how do you know who to trust? Right? And I made a funny video about that, where I said you should always look for the person that claims to be making the most money, because that means that they'll help you make the most money. And you want to look for somebody that has a big following, has lots of people following them, and they're willing to pay a lot for their subscription service, and that's what you should be looking for. So it seems to me like that's what people look for, right? Well, I would be paying more attention to how empirical is their analysis, right? Can they show the data that they're basing their analysis on, and can they show that data has some ability to predict the price movement over the time period that they're making the call for, right? I, for myself, rank seasonality really high. I know people who always struggle around rollover day and day before, after, and are blind to realize, like, I remember no positive rollover day from them. Yeah. I'm not sure how you're supposed to trade the rollover, to be honest. I guess I might see some price aberrations that I could fade, but by the way, the treasury is just being like, look at that, tick at 21.5. I like U.S. holidays while EU markets are open. Probably some of my favorite days in oil. I find them really predictable and great because they are range bound. Oh, really? Well, I guess you're that's still combining with other stuff, right? Yeah. Because I guess the theory that I'm kind of getting at is that you can base your strategy only on historical price, right? But I think that the higher up on the hierarchy you can get your data and keep your data, the better. So if you can make your trade purely off of news, that's better. You're more likely to be profitable with those kinds of trades. Now, there's an issue with news. It's so obviously indicative of the future movement that the market moves really quickly on it, and so your ability to compete in that area is very difficult, right? It requires a sophisticated process to be able to trade news correctly, and it requires resources to trade news correctly. One of the arguments that I've been making is that us in futures, that we actually are pretty well positioned to be able to make those kinds of calls. Okay. But yeah, it can be difficult. So then when you go into the next level of that hierarchy, and you're starting to talk about things like correlations and seasonality, like Kevin is talking about here. Yeah, I think that there are places where there's a lot of people, a lot of retail traders that don't understand those things at all because they only value price, and you couldn't go and find real edges on those. And I think that I have not given enough heat to those edges, because like I'm writing it out now, but then when you go and you say how much time have I spent looking at seasonality? Well, I remember doing it a long time ago and being like, okay, I think I know these seasonalities, and like that's all I need to know. But now I'm looking at it and I'm thinking, no, I think I need to spend more time in that. I think I need to spend more time in the arbitrage type area. Have a strategy I only use on holidays. There you go. So that's my view of it. In the end, trading is the process of taking data and processing it to make entries and exits. That's really all it is. And so I think that in that perspective, you get these different levels. What is the data that you use? What is this kind of analysis that you use on that data? And then how do you manage the trades once you've made entries and exits, right? And how do you analyze your results? Those are the whole thing. So remember that we were saying like all edges come down to discovering an edge, analyzing an edge, and executing on an edge, right? Well, that's the same parts, right? So I say if you're going to start your strategy from base one, the first thing that I would look at is having the best data coming into your system and using the pieces of information that are the most indicative of the kind of on the time frame that you're trading, right? Well, E-mini coming back here a little bit now, huh? And my guts are having a hard time today. Rabobank, one man is responsible for the market reaching its impossible dream, and it's not Powell. Oh. What are your thoughts on price moving back to the point of control? Does that have any stats to back it up? I don't know. So, I'm pretty sure there are some stats out there that you're likely to revisit the previous day's point of control a certain percentage of the time, and it's a pretty high percentage. So there you're talking about a historical tendency. You got to be really careful with an edge like that, though, because the issue with an edge like that is that it's a really broad stat, right? You can say, yes, you're likely to visit the previous day's point of control, but at what point are you likely to visit the previous day's point of control? How far is it going to move in the other direction before it does that? And when you really start to look at things, you realize that you can't just come in and buy towards the direction of the previous day's point of control every day and come in and make money. You're, maybe you would make money over the long run, but it wouldn't be worth it. And the drawdowns that you would take in the meantime would be brutal, right? So, that's where it's kind of like, that's a stat you could build something off of it. You could include it. But I think that if you're really looking for the kind of consistency that a retail trader is going to need to continue retail trading, that you're better off looking more towards the top of that hierarchy, right? Now, next on the types of analysis is like you look at moving averages on them or whatever. Or when you look at the other things that we're doing, we just kind of make general rules like here's the correlation, here's what the seasonality says, et cetera, and we just use kind of heuristics to try and make decisions. And I think that what we can do is we can start diving into more of the empirical research and scholarly research on things like seasonality and correlations. And you can say, okay, how do they analyze those things and what kinds of analysis do they use that have been shown through empirical research to be the most effective? And we can start using those. And so then we can make our own tools, and then we can make something that is much more sophisticated. So now not only are you using an analysis that, data sources that most retail traders ignore to their detriment, but you're also using a more sophisticated form of analysis that is more similar to what the banks use. And then I think you get to the point where you might be able to find a real edge, right? Because you're going to be able to find inefficiencies in the market that are small enough that you can take advantage of it, but that the large banks ignore. Yeah, for this to work, you'd need to be more specific. Like you should include time. How likely is it go to the VPOC? If it is, for instance, already XXX, how likely is it to visit the VPOC after we break previous high low, etc.? Yeah. I researched this for me in oil some years ago, and I found nothing that really helped me, so I ignored it. Yeah, well, that's kind of what I did too. is I did all of those stats and I'm like, well, it's interesting. So, you know, like in the E-mini that you're likely to break the overnight high or overnight low in the regular session, something like 80% of the time, although you don't know which direction. So the overnight low was 40.81 and the overnight high was 41.02. So then should you take a trade now at this moment thinking that we're going to break that range off of that stat? I don't think you should. Just my opinion, but right now I don't see how you can really make a good call with an acceptable risk reward off of just that. So you'll continually find that you can discover what appears to be statistical aberrations in the behavior of markets. Whether or not those are aberrations that simply cannot be explained by pure randomness is another question. But very often, even if you just assume that it's not random and that there's a real reason that it happens, those stats often don't end up helping you because there's still all of the issues of the actual mechanics of the trade. And that's why I think that a lot of things that end up helping you are things more like, oh, hey, if you can play the queue so that you get a quick fill and there's lots of orders behind you so that if you choose to, you can turn around and sell into those orders to break even. That's an edge that's going to help you a whole lot more than, you know, what the daily relation to the VWAP is going to do. That's just an opinion, though. So we're getting into a pretty good, you know, I'm just kind of going through like, this is the way that I think about it. There's a lot of things in there that are unproven, right? I can prove that news moves markets. There's been studies on that, right? Can prove that current price is not really very indicative of future price. I can prove that you can make money off of correlations. There's been a lot of studies on that. I can prove that there is seasonality to instruments. That one is the one that I think you really should factor in, but that you couldn't really do it on its own, right? But you definitely want to factor it in, and it is fairly indicative. Ugh, I'm so sick of the spam. I wish Discord would do something about it. Credit spreads in the summer? I'm not really familiar with how a trade like that would work, but we did not see the baby again. Yeah, I don't know when my wife is supposed to be working this weekend. I think that she might not be leaving until tomorrow. I'm not sure.
Jack Leffy says credit spreads in the summer.
I'm not sure what we're going to do this summer, man, because I'm looking at this market already, and this is the time of year, man. I'm wondering, is there some seasonality to April that I've missed that's been lurking this whole time, and I don't understand why it comes in, and so I've ignored it? Because I've had some bad times in April's before, right? And this time around, it hasn't really been hitting me as hard because I've immediately realized that the volatility is contracting and I've adjusted for it. But, I mean, come on, this market this week has been terrible, hasn't it? Not only has the volatility contracted, but the volume in the futures has contracted a lot as well. I would be really happy if the price volatility had decreased, but the market was thicker and it was moving around a lot, and we were just taking 4 tickers or something. That'd be great. But it's not doing that. It's just like activity has fallen off the face of the earth. And so I'm kind of thinking like, okay, well, so what happens? Well, maybe it's indicative of the market needing to pull back. Could be. I'm not so sure about that one. But it could also just be the result of volatility decreasing and there not being much of a reason to make moves in the market anymore because everybody's long and they're just going to stay long. And if that's the case, then this volatility could continue into the summer and we could have a really boring and difficult, choppy summer. Yeah. I mean, that's what I thought it was going to be last year. And last year it ended up being really interesting. So we'll see, I guess. Fed's Kaplan is talking at the moment. Putin informs Ed Rogan that the new regime on the Montreux Doctrine on the Black Sea Straits must be respected. Honestly, E-mini right now is horrible for me not taking a trade in the last 2 weeks. Oil is carrying you right. It's a shame. It's the best market shame you're blind to see. Well, Kevin, it's not that I'm blind to see. It's that there is no way that I could effectively trade oil given my current risk constraints, right? I could trade it sim and all that stuff, but the way that oil trades, well, here there's two things. There's two things with it. One is that I would need to be able to carry a lot of risk to do it. One. And two, I would have to learn a lot more about the oil market, right? I'd have to learn a lot, and I have to adjust a lot of things to adjust everything to the oil market. And I don't think that I would be able to be like, oh, I trade the oil and I trade the E-mini. I mean, it sounds like you're kind of doing that, but I think that if I was going to trade the oil market, that I would really need to just be focused just on the oil market or the energy markets, rather. Yeah, my eye itches a little bit. I think contact is kind of irritating me. Well, they're selling pretty hard here. Where was the open at? 4087. The EU settlement. Well, that's the other thing is that I can't really trade that late, but that stuff at the 9:30 thing. But yeah, I would because it's like, what is it? It's like $10 a tick, right? On something that can move like 50 ticks all at once. It's just like what my risk reward would probably need to be for the size of the account compared to what the natural oscillation of oil is. I don't think it would work. If they had true micro oil, maybe. But even then, I would still say that like I would need to focus just on oil. I'm getting more interested in the treasury markets because I'm trying to look at correlations and things like that. I'm trying to just identify like a really small mispricing in the market. And I think that I'll be able to take advantage of those more easily in treasuries and E-mini than I would other places. Like E-mini is a really random instrument, so there should be lots of opportunities in that over there. And the treasury just has a lot of correlations to a lot of things. So even though I don't think that the activity level over there in the treasuries is very good for that, it could in the future be a good opportunity. So Well, they may come back to the open. Well, we got about 30 minutes left. And I don't know. I mean, there for a moment, it really looked like they were about to careen into the open and go straight up short, but they are at a spot where we might see some potential support. I do see a little bit of absorption and stuff, so I don't know. So look at today's chart and tell me that you need a stop for that. Okay, sure. So if we come over here and we got oil, right? And we look at just today and we say, I want to be in for 5 minutes and I'm potentially risking $10. So I'm potentially risking $100 a trade. Yeah, that's too much. I think that for me to even think about trading something like that, I would want to put like 10K down.
Jack Leffy says being good at trading oil would be a dream for me.
Well, I don't trade the E-mini either. I trade the micros, Kevin. I probably wouldn't be trading E-minis right now if it wasn't for the micros. Because that's more money than I'm willing to risk futures trading. Like, yeah, like the thing I keep trying to get across to everybody is like, it's really effing hard. And it's really not worth it to risk a ton of money unless you've really got something that's really, really working. So even when I'm coming in here and it seems like I'm doing really well that month and like, oh, look, I made $1,000 off of just micro contracts. That seems really good, right? But that doesn't mean that I should scale up and start trading full E-mini contracts. That's not enough performance, in my opinion, to justify that, because that there could just be luck. It could be the seasonality. It could be all of these other things, right? And I often see people risk thousands and thousands of dollars, which I guess if you have the money to risk that, that's fine. But I don't think that it's worth it for the vast majority of people to do that, you know? Whereas if I can get in and I can do something where like I'm pulling one tick out 70% of the time in the 10-year treasury, then that would be worth starting to risk more money on, right? So I don't know. There's a lot of, whole thing is you can look at the market. There's market makers and there's the informed traders and there's noise. And without the noise, the market doesn't work because there's not enough benefit for the other players to come in and reveal the information that they have without the noise. So somebody has to do it, right? But most of the noise traders just lose money because all of the things that they think matter end up not mattering. And how do you know when they matter and when they don't? You can't. It's just, we can't predict that kind of stuff. So when you put that into that context and you say 95% of traders lose money, I'm not saying that you shouldn't try, and I'm not saying that you can't get good at it, because it's definitely a skill, and I think that a big factor is how long you stay in the game. I also think a factor is what kind of strategy you use and how empirical you are about it, which is why I'm always bashing on things that from my empirical studies aren't very effective, right? But another factor in it is just managing your risk really well, which many people don't do. Now that probably doesn't make me the most popular, right? if I come in here every day and I told you guys, oh my gosh, trading is so easy. You just got to follow this moving average. Every time that we cross the 10-minute moving average, buy it. Something like that. Which is what the vast majority of other people on YouTube are doing from my observation. Technicals always work. Just find your technical setup and just always follow that. I'd probably be a lot more popular, right? But I wouldn't be helping any of you, and I wouldn't be helping myself.
Jack Leffy says click buy.
I think the thing that helps me the most is guiding you guys towards the directions that you're most likely to find information, and then collaborating with you guys to help figure out ways to trade it together. That's what helps me the most, right? And we've found some really good edges from time to time, often news-based, right? Often news-based, where we really understood what was going on in the markets. And we did well. Well, you could still trade oil sim, no overtrading, only EU settlement, at best 1 to 2 trades a day. Yeah, we could. If I was still around at 9:30, I suppose we could try doing that on. Yeah, I don't know, Kevin. So yeah, that's a tough one actually, because it's kind of going back to okay, so once you have your data hierarchy in place and your analysis hierarchy in place, then you can go back and you can say, okay, what kind of strategies should I focus on, right? Well, I think that trading oil would be pretty high up on that list, yeah? So it's 8:38, so we got an hour to the European close right now, I think. Unless we're still in the daylight savings time weirdness. But I think that oil would rank up there really high. But I also think that the things that I'm looking at in treasuries and E-mini are rank up pretty high too. And you kind of can only pick, you can't pick them all, You can't pick them all. I don't know. The oil market is so much more complicated than I think a lot of people give it credit for. And it's a big market too. It's just not very accessible to people, so they don't think about it. Well, that's interesting. I said it's at a spot where they could potentially bounce and they turn. So here's a great example of okay, so did I know that it was going to turn? Did I have an edge there that told me that it could potentially turn there? Well, I don't think I do, but it's not like I've ever tested that specific spot. I don't know how I would even identify that spot mattered. By the way, we just finally got a Gabby trade. So Kaplan is talking, and markets might be reacting to something he just said there. Fed's Kaplan, I'm going to see the results, so I'll always use forecasting. Inflation objective is still 2% even under the new framework. The conclusion of the pandemic indicates that we were able to control the outbreak to prevent it from spreading further. I don't know if there was something that he said there that made a move.
Jack Vafi says dump it.
I don't think that France M is a voice that we have.
Kevin Wimmer says you mostly need to know when to hold still, when to be less risky or stay out. So many people don't know OPEC days.
Right, yeah. Well, that's where I say that I find it difficult, because I read a rundown of my like all of the markets every morning. And there's always a section just about oil. So they talk about, well, they've moved because of OPEC this and OPEC that. And the reason why I say it gets difficult is because, one, I have a really hard time keeping track of all of the tiny little developments that happen over that sort of stuff, right? And all of the politics of it, because it seems like oil market politics is a really complicated thing to me. And then there's all of the different oil supply reports. So how do you read those reports, and what areas are they coming from? And then there's all these other things, like people have ways of kind of saying, well, I think that there's going to be more supply coming from this spot and this spot, and I think that these guys are going to make this decision or that decision. And that's where I'm kind of like, I start to get lost. I'm like, well, I can read what's happening, but I have zero ability to really even spitball what they might do next, right? Whereas with the treasuries, you notice I almost always have like a bunch of scenarios laid out. It's like, well, Fed's thinking this right now. This is the range of things that you could potentially see out of the next statement. Here's the political, I can explain all of that stuff. And I don't know if it's just that because I don't follow it in oil or what, but I just know that, like, even though I have the news in front of me, that I can't make that kind of analysis over there. So, yeah. But, it doesn't matter what you're doing. Trading's always going to be hard. Fitz Kaplan says, one reason for the stock market's growth is fiscal policy. Okay. Well, so they bounced back. Now they're back down to the bottom here again. Oh, yeah, but that was because they had that aggressive sell that we don't really know why it happened. But now they're kind of inching down on that open, and I'm kind of thinking that we could maybe take it short. Well, there's some absorption there at 40.89. I think if I'm going to take a trade, I should wait for the volume to pick up a little bit more first. It is a little bit late in the day, too, to be trying to make it some big play, given that it's Friday. And given that I got a pretty good trade from before. Now, looking at my J's, let's look at what my robots are doing today. Well, it looks like they're mostly in line with what they were yesterday. Probably we need to let them keep going. Let's see here. What did we come out with yesterday? Let's sell. Okay, so it was the min invert and the max invert did well, the best. Well, max invert is doing better than max, but min is not doing better than min invert today. Curious. Also, I haven't seen Gabby take a trade. Potential to take a trade off of that last little move down, but I think that they're just going to go sell off, so it might not happen. Oh, Powell will appear on 60 Minutes on Sunday night. Oh, boy. Wait, what? Citi says it knows of another bank that made a big payment error. Other bank's error is even larger than its Revlon mistake. Okay. Well, flow for the moment still looking pretty bad. Almost all of these markets are down now, except for corn and Bitcoin. Corn up another 1% today, by the way. Corn has just been on a tear. Bitcoin has been going okay today, but where is it? They're pulling back a little bit and still well away from like the last swing up. So be more concerned in oil and Bitcoin if later in the day they drop below 58, something like that. Kaplan says the dollar reflects relative performance of the U.S. economy. Hence, I get you. Basically what Fed's Kaplan is saying is that if Europe hadn't completely screwed up, that the U.S. dollar would be even lower. That's what he's saying. I agree with you, Mr. Kaplan. So. And another thing with oils, there's this whole thing in Yemen, right? So there's all of this stuff going on in Yemen, and us in the United States, so we don't hear about any of it. So Saudi-led coalition says intercepts and destroyed explosive-laden drone launched by Yemen's Houthis towards Saudi Arabia's Khamis Mushat. And then earlier, the Yemen's Houthis were saying that they carried out an attack on the airport. Well, they're not going for the open yet. They're sitting on the edge. They seem awfully close, but they haven't done it yet. A little buy coming in there. Where are you trying to get? You'd use the exclamation point info and it will tell you the names that are available or the accents that are available. I don't have an Arabic accent. Oil to $300 a barrel. I mean, given where we were last year, $60 a barrel is not bad. Many people saying, maybe it will never recover because I wanted to get into oil. I should have done it. I don't know why I didn't do it. I guess I didn't really find a good opportunity, but I should have done it. I think I need to change that little message because I changed the Germany one to match all of the other ones, so that it's just German F. Some of my robots here seem to be over trading all of a sudden. What's with that? Oh, I see why. Because it's very much going back and forth. Oh, so that's a problem. We need to do something about that. What can we do about that? Maybe I need to put in some degree of timing to it. The market's not moving fast enough. It just won't try and trade. the market is swinging pretty they're overshooting quite a bit for it to be that tight. So for it to be that tight on the level 2, that is. But let's just let it play out, see what happens. Maybe the min algorithm could come out profitable in the end. And it is definitely Friday today, isn't it? So let's put today's high PPI, late PPI release sparks inflation fears. That's what we're going to call today's video. Yeah, they're kind of stuck there at that 4092 area. There's been a lot there, and that was kind of where we had the slip. Actually, it was 91. But I would say it's definitely turning into a churny Friday. So, yeah, I don't know. Not much else to say. I guess this is kind of what we expected Friday to be difficult, right? So I think I'll just end it here. I did okay. I pulled things out in my e-mini trades, in my treasury trades that I'm pretty happy with. And the e-mini is not bad. But I don't know. We'll see what happens next week. You think that we'll get down to 16 in the VIX? You think this will continue, or do you think that things will flare back up again? We'll see. Find out next time on. No. Catch you guys later. Make sure you follow. I should do all of the little rundown of things, right? Make sure that you're subscribed to the channel and like the video, of course. We're only 7 likes today. That's okay. The lighter audience today, though. Also, if you haven't checked out the TikTok, check out the TikTok, because I'm putting some content out on there that I think a lot of you guys would appreciate, especially the Steve stuff. Steve is great. I'm having a lot of fun. I've got a skit that I'm posting today for Steve that I've already recorded that I think is fun. So make sure you don't miss that. And in the meantime, stay profitable, friends.